The dividend company by far. This is Realty Income Corporation. Let's analyze it together. But first of all, guys, read the disclaimer right here and the video description below. And actually, we're gonna calculate the dividend from the beginning because it started back in 1994 at the end of that year, and the dividend, including the dividend, the stock is nearly 5,000%. Not that bad, I always say this: it's like if it performs better than an index, it's a good stock. This is the case, certainly the S&P 500 didn't get nearly 5,000% in just the last 25 years or 30 years. So still, guys, the key question is like, will it continue? Let's analyze exactly the latest lines that we have right here. So we're gonna actually analyze it from with the dividend including, because this is the ADG right here below at the right, which means that it includes the dividend. Because this stock is focused on dividends. It's a monthly dividend stock, and with the performance that we have right now in terms of dividend is 5.79. Not bad, but obviously you buy the things that I really like about dividend stocks is like when you buy them, for instance right here in 2012, and you hold it for a long period of time. Normally they increase the dividend, which is the case, and as they increase it, you get, for instance, instead of 5% at that time, you get like the 8%, 10%, 12%, because you bought a lot of shares at that time, and now you have them. You can buy right now shares with this stock, but you with the same amount of money, you will get less stocks. And the thing here is like you bought it time ago, you have a higher number, and now they increase the dividend, so you get like higher percentage of the dividend as well. So that's the magic with the dividend stock. And right now we have three different lines, support levels. The first one, the lower part between 2017, 2020, those areas, I don't think we're going to see them again anytime soon, but anything can happen in the markets. But as you can see, this is a monthly chart. It doesn't usually happen. Here we have several crashes, but it's very difficult to see that happening again, but it could happen. Anything in the markets, they can surprise you anytime. But for the moment, we're going to study the fundamentals as well to see if it could happen, because if the fundamentals start to decrease, you see like a weak financial results, anything can happen, and that's a very dangerous situation. So let's load the net income, which is probably my favorite indicator to analyze if a stock is performing well or not. And here we have by quarter and the net income of Realty Income Corporation. So there's like, this is magic, because when you try to find like a bad quarter, the only bad quarter they had was back in September 2020, in terms, when we're talking about recent financial results. At the time, it was like a minus 1.1 million only, because the rest of the quarters, 200, 219, it's like very good financial results, and that's important. So I think it's stable. Here you can see maybe a dip right here in February 2024, but it's stable. The thing is like we have negative surprises factor, but it's not the problem, because then you have the dividend is guaranteed by them, according to them, and you receive every month. So it's wonderful in that sense. And then we go to the forecast, because obviously this is the present, but the future is the most important factor to assess if we're gonna continue to get the dividend. One strategy that companies have with the dividend stock is like when they see that the net income is gonna drop. For instance, if we have like a 10-year situation that is gonna be in negative territory, what they do is they decrease the dividend for those particular quarters, so they avoid the losses. They can avoid it, not every time, but most of the times. Here in the forecast, let's study the fundamentals right here. We have like 19 analysts from Wall Street. The average of them, let's actually load it again. And the average of them, they think the stock should go up more than 10%. The most optimistic one, more than 18%, and the most pessimistic one, 3%. So on average, they are very optimistic about this one. The problematic thing with this one, probably the negative surprises factor, as I said, is not a problem because the net income is positive, it's stable, and that's the most important thing. So as long as they continue to get like good results, obviously they can be better. They expect more of this company, but at least they have good financial results. The thing here is like in order to see the stock growing, the price action is not gonna be possible in that sense, because as you can see right here, the net income is not increasing. So what we're gonna have like is we're gonna have exactly a performance because of the dividend. So the price action is gonna be similar in that sense. And actually, I didn't see it, but let's actually see it. As you see, it's like I didn't see that, but this is the thing, you know, the price is going sideways every time. It doesn't seem that it's happening anything, but you know, here we have a stable income, very similar every quarter, because they, you know, and they give the dividends to the stakeholders. You know, when you include it, you have the performance right there. It's not super wonderful, but it's just like stable, and that's the important thing in terms of risk. And when you are buying a stock like this, you don't expect, you know, to hold it for a short period of time. You buy this stock because you're gonna hold it for a long period of time, you know, 10 years, 5 years, 3 years, because you are focused on the dividend, on the high dividend yield that you have right here. So that's the important factor. The only danger situation is when you have like a very bad EPS forecast, and it's not the case right here. You can see the estimate for the next quarter is 0.36, and the next one 0.36, 0.36, and 0.35. So very stable. The revenue as well, very stable. That's very good. That's what we want with a dividend stock. And we go to the annual, and that's another thing that I like. It's like, and this is my opinion, of course, you know. And again, I have the disclaimer right here. The estimate right here is like 1.48. If you compare the data to the past, that's the best financial result of the company. I like it, you know. And then we have by 2026, the same thing. And by 2027, the same thing. It's like a better net income every time. Obviously, we have the reporting, but it could be worse, it can be better. But the forecast at least is daytime is like increasing, and that's the important factor, you know. And overall in the revenue is even better, because right here the reporting and the estimate, they are very close to it. So, and that's increasing every year. So that's what we want with the dividend stock. Stable, increasing a little bit, you know. It's like not much volatility in that sense. We don't want volatility in a stock like this. We just want to have like stable income, stable revenue, increasing a little bit, and that's it. You know, you have the dividend, the price action, you don't care that much, as you can see, and that's it. So let me know what you think about this one. Is it a good one to hold and to buy and hold for the long term? Or it's just a waste of time? Leave your comments below, and see you in the next video. Also, remember to subscribe to TinyST, and here you have some special discounts, and you know, with TradingView, the platform that I use, and also Broker 2212. Thank you very much, guys. See you in the next video. Bye bye.